This is our Forex blog for April 12th, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. The more time frames that line up, the better. Increases your odds, and it also increases the likelihood of catching bigger 20 to 50 or even 80 plus pip moves versus when the real-time trend's up, the daily trend and weekly trend's down, the monthly trend's up. Becomes harder to trade those pairs. This is one of the easiest ways for both new and existing traders to trade. And the real-time histogram on the top, we statistically compare the dollar to every other pair. It uses 5 of our best statistical tools we've come up with over the last 6 years. 3 of them measure the direction, what percentage of dollar pairs are going up or down. 2 of them measure the intensity of the direction, and then we average it together. Underneath that, we show our new pivot score daily, weekly, and monthly trend, which not only shows the direction that the dollar is going in this instance, but the intensity of direction. And because this is based on support resistance areas, when a level changes from slightly down to extremely down 2 hours ahead of midnight, it means basically that the dollar is breaking through support areas which usually have buying at, and basically means that the dollar is not being bought. At very high probability buy areas, no one's buying it, these levels are getting penetrated, and therefore that trend's very likely to go to the next support area, which allows you as a trader to profit off of. So coming up to midnight, you can see the dollar is extremely weak. The yen was weak, however the monthly and weekly trend of this is up, whereas this it just kind of shifted to neutral, and the monthly trend is far less weak in the dollar than it is the yen. The New Zealand was strong today. You could trade this and also the Australian, which is the strongest of all of them. Let's scroll back and see when that became the case. Yeah, it was strong even coming up to midnight. So one of the highest probability trades, if you want to trade the dollar, is simply looking to buy the Australian dollar. And you can see that's exactly what happened coming up to midnight here. You have a nice little flag pattern right here. It's more of a wedge pattern breakout, which went to the 200-day moving average. One of our tools shows you very high probability key support resistance areas on the monthly chart. And this is also a Fibonacci profit target level I did last night, which acted as major resistance for about 9 or 10 hours before the market finally broke through it. But you can see if you basically focused on buying this, you have a profitable trade here, pretty much break even or small loss, small win, 15 pip win, nice little pullback right here. What I typically do is wait for at least a 15 to 25 pip pullback. I will draw trend lines over the bar's high, and I'd be in this trade right here at 76 with my stop right underneath the low. About a 12 pip stop. Comes back up and double tops up there, and as you can see, it starts to lose its strength. Good place to get out. Anytime it's above the upper containment band, pretty high probability place to get out. But again, if all you do was focus on buying this, as you can see, it keeps on every pullback going up. And that's one of the benefits of having our new pivot score combined with our wonderful FX Trend Pro, which we've used for the last about a year now. Other ones that you could have traded against the weak dollar are, the CAD. However, the CAD has a weekly trend that's down and a monthly trend that's down. I don't really use the monthly trend too much, other than sometimes I will add to my position sizing. But if the weekly trend's down, you got to be careful. For instance, let me just showcase one instance here with the euro dollar. When price is above the hourly, it's more likely to go up. You can see the weekly trend's down, the monthly trend's down. You certainly, when you see extreme momentum on the way up right here, look to buy that pullback. But because the weekly monthly trend's down, you can also look to get short at the upper fib targets, especially when they are above the upper containment bands. So if you had sold right here at the fib target, and with the plan of scaling in if it hit the second fib target, usually if you get in, let's just say 1 lot here, 2 lots here, your average price is somewhere right underneath the second fib target. If it pulls back even 5 pips, you can get out at break even if the trade doesn't work, or if it pulls back, in this instance, 10, 20, 30 pips, you have a very nice chance of catching a 30 pip win. Now notice on this pullback right here, it didn't have that much weakness. So when it does pull back, after you get short at a fib target, you want to redraw your fibs. Usually it will retrace somewhere between the 30 and 50% came down to the 62% level, and it hit that level twice with almost no weakness. Exit your trade, flip and go long, and ride it up another 40 pips. So even if you started trading after 6 and you missed this first wave up, you might have made 20 pips here, 30 on the way down, 40 on the way up. When the real-time trend's up, you certainly want to trade that, but if the weekly and monthly trend's down, you can certainly look for counter-trend trades. And if you, one thing to keep in mind is on the way up here, it didn't go to where the fib target would be on this next move. It didn't quite get there. So if you wanted to sell there, that's fine, but it didn't make a higher high to a fib target. You really want to only do counter-trend trades if the weekly, monthly trend are down at the fib target, not just a double top right here. And if you did get short right here, you pretty much didn't lose any money. You just kind of sat there for 2 or 3 hours with no profit and no loss. The New Zealand is also strong today, so that would have been another one to focus on buying against the dollar. And really, there's major resistance right here. This is a Fibonacci area I drew last night. It's very high probability resistance when the price is coming up to it from underneath. We have the previous day's high right here. So you might have really wanted to wait for this breakout right here. And the first one failed. We would have lost 6 to 10 pips. And then on the second trade right here at 22, and our trailing stop got you out at 68. That's a 46 pip move. So really, that's the key to trading. Small losses, bigger wins. If you wanted to take every single trade, you can see here in at 96, out at 13. That's not too bad. In here, out with a 5 pip loss. In here, 5 pip loss. In here, another 5 or 6 pip loss. And then you finally made 40-something pips. But it's usually, if you're stuck between 2 resistance areas, 10 and 20-day moving average for support, weekly pivot as well, all bullish signs, but there's major resistance. The Fibonacci areas are very key, and with our software, you don't have to spend 30 or 40 minutes every night doing Fibonacci analysis. I do it for you. The light gray levels are Fib retracement levels. The dark gray are Fibonacci profit target levels. You know, more than likely, as I zoom out right here, you can see the previous day's swing up from here to here, and that's how I came up with the Fibonacci profit target level. And I add a couple pips padding to each side of it because fibs are not an exact science, and you want to kind of trade them as a zone versus an exact number. I like to end today's Forex blog by looking at the pound. The daily trend was down, had a little bit of strength right here, which shifted the daily trend to slightly down. Then it went up a little bit, and for about 10 minutes it had extreme strength, and then it shifted down again. By seeing the previous momentum of this currency that was down, as soon as the strength disappears, you can look to sell it. Obviously, the dollar and yen are weak. The Australian and the New Zealand are the strongest on all time frames today, well, with the exception of the monthly, but again, I kind of ignore that. If you have real-time strength here, the daily trend and weekly trends up, you should be good. Let's scroll this back. Somehow I got scrolled back. You want to sell the weak pound versus the strong Australian or New Zealand. So let's bring up the pound Australian, and you can see that this one pretty much fell all day. If you looked for pullbacks up to sell, you can see it started to go back down. Nice little multi-hour sideways range right here that if you had sold the low right here at 63, you got stopped out at, if you sold the low here at 35, you got stopped out at 41, very small 6 pip loss. You got short again here at 38, and it got you all the way out down here at 67. So you can see in this last move, it fell over 50 pips. That's a tremendous, it only takes one nice trade like that to get rid of 5 or 6 tiny losses, especially if they're 3 and 4 and 5 pip losses. Let's look at the pound New Zealand. Same exact thing happened. This one's kind of going sideways, and when it breaks down, the final move right here from 18 all the way down to 80. It's about a 140 pip move. So again, one nice move like that can really eliminate a lot of your losses. And that's why we use the currency meter. And I'm also very happy and proud to offer traders now our new pivot score, which the new currency meter has it built into it. Pivot score daily, weekly, and monthly. which unlike the older daily, weekly, monthly stat tools that we offered, which only worked live, now when you bring this up on your chart, I'll prove it to you, hit reload on the chart, and it will historically draw these as well, so that you can get a perspective for how the currency behaved. You know, if you brought this thing up right here at 7 o'clock, if that's when you first started trading with the older tool, the trend was up, and it would color code all the past bars green too, because there's no way for us to accurately calculate it for the past. It only worked live. So now with this, you bring this up and you say, oh, I've had a lot of weakness here. It's obviously undergoing some strength here. The weekly trend's just barely up. The monthly trend's up. But as soon as it goes back down, you can start looking to sell it. Now, the CAD was also strong, real time and daily. And so that means you could also have sold the pound CAD today as well. And again, notice, you know, when you sell a weak currency versus strong currency, you have a lot of times these big moves. This fell almost 100 pips today.